Welcome to Magnet Minutes. This is Jordan Kimmel with an update for May 24th, 2022. And it's a pleasure to bring on an old friend and new friend. It's Todd Schoenberger. And Todd, as you know, we all know him from Buy, Hold, to Sell. We know him from media for many years, but Todd is also the Chief Investment Officer for Crosscheck Family Office. And Todd, thanks so much for joining us.
Thank you, Jordan. I really appreciate being here.
Well, let me say, Todd, I had a lot of fun on Buy, Hold, Sell. We'll get into what that's all about, and we'll actually invite people to watch the entire clip. We want to show some highlights. But Todd, what I love about it is that unlike the scripted Wall Street, always be fully invested, always write out the market, you're willing to go to different places and really tell it as it is. And for someone who's run a quantitative long-short model for years, it's not that you are a media celebrity or an investor who also runs a great media show. So tell us, before we get into the market a little bit, tell us about Buy, Hold, Sell and where everyone sees it.
Yeah, well, a couple of things. We started the show really as a spin-off of a show that Tobin Smith and I used to do on a cable network. And so we decided that maybe we should create something that is slightly different. And one thing that we wanted to do was still have that rapid fire, high energy type of financial talk show, but we really wanted something where we had conviction, where you would actually say, oh yeah, this is going to happen today. The markets are going to go up today or they're going down. The worst thing that a lot of financial news networks do is that they'll invite guests on that are they're just agnostic. They'll say, oh, it could go up, could go down, could stay sideways. That's really, it does not provide a value to the viewers. So we wanted to create a show that would provide value, but also be entertaining and knowledgeable. And we think we've accomplished that so far. So we're very proud of what we've done and what we've been able to create.
Right. Well, I have to say that I've joined you guys on that old network, and I've been on the Buy, Hold, Sell on that network as well. And your show is so professionally managed with the engineers. I think you just get it right. And again, you definitely guys bring on the energy, and I love being on. I love coming on again. So, you know, we talked before and we know each other a bit, but share a little bit. You've been in the business a long time, like myself, but actually running money for your family office and running a quantitative model. You could describe the model, but what I really, really appreciate is, you know, Magnet is itself a very quantitative model. I don't like to predict exactly what's going to happen in 3-5 years. What we do is we know what the spreadsheets are showing us now. We know what the trend is now. So share a little bit, Todd, if you don't mind, about your own model, your experience with it, and your specialties.
That's right. Well, my experience has been mostly in finance and media, and this goes back a couple of decades. I started in 2009 a quant model while I was working at USAA. I used to run the brokerage division for the military-based company down in San Antonio. And part of my job wasn't just to run the brokerage, but was also to come up with easy to understand investment models for our members, which are soldiers, which are our members of our military. And for all the military members listening and watching, definitely thank you for your service, especially with us bumping up to Memorial Day. But with that, the one thing that I wanted to do was create a model that was simple to understand. Not that military members couldn't understand anything that was highbrow or very really digging deep into the weeds. What I wanted to do was really cater to that 19-year-old enlisted soldier, the one who's facing combat, who actually has to get on a phone call and speak to a representative at USAA and really have to understand what they're investing in. So the model itself is very simple. It's a long short model. I cover 3 sectors: oil, precious metals, and real estate. And that's it. You're either long or you're short or you're in cash. And there is a specific algorithm that actually will tell me and give me the inputs to tell me whether I should be long or short or in cash. But it's enough for someone who, say, a private first class Smith from Topeka, Kansas, as he's in combat overseas. I want him to understand that, hey, if he's long oil and he looks online and he sees that ExxonMobil is up 2%, he feels pretty good that, hey, maybe I'm making a couple of dollars today. So the model was specifically made for the members and the service members at USAA, with the intent of just being simply understood. And it's carried on since then, and it's worked out exceptionally well. It really evolved from working just as a subscription type of business model, really evolved into being put on different platforms for different brokerages. RIAs were using it. It evolved into a hedge fund. It worked out really well. Now it's just with the family office exclusively. So we're really proud of that. But Crosscheck also has different lines of business. I mean, Jordan, like you said, you were on Buy, Hold, Sell with us. You were fabulous, by the way. I'm really looking forward to having you back in June. I know we already have you scheduled, and that's going to be another excellent show. But part of my job is to come up, not just run that one model, but also come up with alternative investments. And Crosscheck Media is a spinoff of that. And Buy, Hold, Sell is one of those shows. And we're creating several different shows that are going to be put on different streaming channels. The Buy, Hold, Sell program is currently on Roku. We just signed a deal with Apple TV that's starting in July. Buy, Hold, Sell, along with all of the other shows that we're developing, will also be distributed on Apple TV. So if you are a subscriber, you can simply tune in and watch it that way as well.
Well, fantastic. And look, there's no doubt other services are picking you up. You guys really run a terrific show. And frankly, I'd be on as often as possible. I love the energy, and I love the conviction. And so let's talk about this for a minute. Let's talk about the markets themselves, because too much of the public, as we discussed, are sitting overly long in 10 stocks, regardless what mutual funds they're in, no matter what brokerage firms are in. They all kind of bought into this extended story, I believe. And so all of a sudden, about a year or so ago, I didn't know why, but all of a sudden, oil and gas companies showed up to the top of Magnet's model. Mm-hmm. I wasn't making any predictions, but we follow the model. We have a lot of exposure in that area. And, whether it's becoming a crowded trade or not, I'm not sure yet. What is your model? I'm really interested. What does your specific quantitative model say about the oil and gas business right now?
Well, we're definitely long. I mean, there's no doubt about it. I've always been an oil bull as it is. I mean, we find our moments when we have to go short. The thing that was a bit concerning, when you look at the three big oil companies, you have Exxon, Chevron, and ConocoPhillips. For years, they really didn't move much. Actually, if you look at if you go back to when Apple overtook ExxonMobil as the most valuable company in America, right, the market cap was, I forget, it was something, I forget the exact number. Yeah, 400 million, I think it was for Exxon. It's still 400 million. And so it's been a slow roll. Now we're seeing that value move higher, mainly because of oil prices. We're out of the pandemic. We still have lockdowns taking place in China, but overall, from a global scale, people still can continue to consume oil, and that is impacting companies like an Exxon, who do have new operations as far as new drilling contracts around the world. They're doing great, but that's one of those companies, along with Chevron and Conoco, that it's almost like a pack of baseball cards. I say this to everybody. You buy the baseball cards, you put them in your attic, you pull them out 30 years later, and they're worth something. Exxon seems to be one of those companies. So our model has been long oil. We've been long oil for some time, though. And I got to say, I mean, we're willing to ride out the down days. What is concerning, though, is we haven't seen the demand destruction with consumption yet. Once that does happen, then that's going to be the time you want to go short. I know Exxon's down today. Mainly broader averages are down anyway. Tech seems to lead the way on that sell-off. If that's the case, I would still hold on to it. However, I wouldn't hold on much longer, especially if the world does go into a recession, which could happen in the second half of this year if we're not already in one. that would probably be the time you want to start going short oil. And that's probably when our model will tell us to.
Right. And you remind me as well, I hope. And you know what? I have to tell you, Todd, I remember seeing a really interesting study years ago where they showed a barrel of oil, if you will, and then they showed where the consumption goes. And a lot of it does not go just into the gas tank of cars. There's all kinds of other use,
Oh yeah.
fuel, airplane, and
Carpets,
all kinds
perfume,
of, right.
makeup, take your pick. I know it's big. Listen, I've always said, and we've been on TV before about this, Jordan, where I've always said oil is more valuable than oxygen, it seems, to humans. I mean, we use it for everything, and it's not just for petroleum products. And so when you start thinking about the ancillary parts of that business, we talk about carpet. Well, new carpet means, do you have homes? Do you have houses that are going to end up being remodeled? And you can look at some of the those ancillary companies like a Home Depot and Lowe's. If you see those numbers down, that means people are not doing the DIY stuff. If they're not doing that, they're probably not installing new carpet. If they're not installing new carpet, that's just one part of it, but that's part of the demand destruction. And we just haven't seen that quite yet. I do believe it's on the horizon, and it will happen, but people just have not curbed their consumption habits nor their spending habits.
Right. And that's the whole point, Todd, about keeping your eyes on the road and not this blase, always long, always equally weighted among this or that and the other thing. And that's where active management comes in, which is what I really believe in. So I want to talk about real estate. And so, real estate, maybe it might seem more cyclical. I'd rather not tell you my opinion. I'd rather hear from you what your model says. Tell me, what you're seeing and thinking about overall real estate right now.
We're short real estate right now. And the trigger of that, and it's common sense, is that higher interest rates are causing mortgage rates to go higher. You're seeing that in some recent data from that's being released in housing data. Pending home sales and new home sales are down. When you see those numbers, especially during the peak home buying season, which is what we're in there right now, that is very alarming, because it only spells a dire outlook in the second half of the year as rates continue to rise. Fed has been very transparent about hiking rates. And if that's the case, and then you get into a slowdown in the real estate buying season, it's not looking good. I mean, you see some of these home builders, KB Homes, Toll Brothers, I mean, just taking it on the chin right now. I mean, they're not doing well. And this is the time of year when, if you're looking to buy any type of seasonal type of company, now is the time you want to start looking at real estate stocks. Unfortunately, they're not cooperating, and as a result, probably an industry that you want to stay away from. But we're definitely short on the real estate side.
Interesting. And the thing is, a year or so ago, and you see how quick the mood changes. I think we're in just an unusual real estate market where there's so little supply. If you can get a good price for your house, where you're going to move. And still, the fact is that prices of home stocks are clearly down. And trending lower. And so I think your analysis on the interest rates, clearly, people were getting mortgages, for so little. I remember when I bought my house, I look at these 2% and 3% mortgages, saying, my God, money was kind of free at that time. So let me ask you this too. I want to segue away. I actually love to read, Todd. Looking at your bio, I know you have No Lies, Live Forever. You're also an author, and so I'm going to read that book. It sounds like a really cool story. You want to tell? You want to tease the audience what the story's about, maybe?
Well, it is loosely based off of my time in New York running a hedge fund, and so it really gets into. It's actually rather interesting. The timing of this. Here's the premise of it. So when I was a hedge fund manager, we actually had someone who had approached us from an area in Eastern Europe that was telling us that basically Russia was looking to take over or at least have a major influence in several of the countries in the Balkans region. What had happened was, as we understand it, the United States was willing to send cash to the Balkans region, quite a bit of cash, in response for them to basically ignore the Russians. I know it seems far-fetched, and it may have been, I don't know, but all I do know is that a lot of the countries in that region, they don't export a lot. So they had an influx of money and they needed to do something with it. So they started to look at US-based hedge funds, US-based banks to invest that money that was coming in from Washington. And this is a way to basically have influence without firing a single shot. How do you do that? Well, you obviously can do it with money, and then you try to seek that influence. And this was a way that we could combat the Russians from moving into Eastern Europe. So here in the Balkans region, they're looking for hedge funds. Ours just happened to be one of them. Some of that money would end up flowing into the fund. And as a result, it really gets into a little bit into the book. It's very entertaining. There's a lot of parts of it. Really provides a behind the curtain type of view in the hedge fund world, which is already mysterious as it is, only because, as you know, Jordan, you're dealing with accredited investors. It's a very affluent type of crowd that you're working with. You're involved in several meetings that people would love to be part of. But I really went into a lot of detail with some of the meetings that I was in. And I wouldn't mention names, of course, but I did provide a little bit of guidance as far as anybody who has a curiosity as to the inner workings of Wall Street. So really went into it. I did sensationalize a few parts of it to try to make it much more entertaining than it already was to live through. But so far, I mean, everybody seemed to really like it. So I hope you enjoy it as well.
Good. I'm looking forward to it. You listed as fiction, but I'm sure there's a whole lot of thread of your own experience. And so every once in a while, we need to step back and read a thriller. And Todd, I'm glad to see you did that. And so, let me just ask one thing as we'll wrap it up here is a lot of people are saying the same thing on television, or, when you meet them a year later, they say, well, I knew this and I knew that. What I'm not good at, Todd, is seeing around the corner, if you will. And I follow a model very carefully. Is there anything that is not being talked about in the general media that's on your mind that you tell people, watch for this or watch for that, or, something you're thinking about that not everyone else is?
Yeah, the debt to income ratio. I am shocked that nobody's talking about how much consumer debt is being added to households right now. We received a number of, was it 16 trillion? It was some crazy number last month that has been added to the household debt load. Maybe it wasn't trillion, it must have been billion. But the point being is that you have people that are adding money, that are using credit cards to pay for household goods and services. And if that's the case, that's only going to continue. You had a 9.6% lift in food costs in April year over year. Bloomberg came out with analysis today showing the year over year inflation for electricity in major cities around the country. New York City is over 21% year over year. It's huge. Miami actually tops the list, surprisingly. But when you start looking at the fact that people have to take on debt to actually put food on the family table, pay the electric bill, you're looking at paying for shelter. You're going to start seeing defaults on mortgages. It's going to be really ugly. And when I start looking at debt to income ratios, and this is something that we used to do with going back to the Obama days, I mean, it only seems that that's a number we're going to start talking about in the second half of this year. And you know as well as I do, Jordan, that kind of debt, if you're carrying that kind of debt load, you have bankruptcies that are going to be up. You're going to have a drop in savings rates because you can't save if you're in debt. And it's only going to continue. And that will have an impact on discretionary incomes and therefore stocks down the line. I mean, 70% of GDP is the consumer. I just do not see it right now. I'm very concerned with that. And I'm surprised a lot of people aren't talking about it.
Right. Todd, look, I think you're making a great point. You hear on television how flush the consumer is and how much money the consumer has. And that is, again, the top 5%, never have any issues. But,
Yeah.
clearly what you're talking about, the inflation is eating away at everybody else. And it's showing up in these retail sales that are just blowing people's mind to, the big misses. So I think you're bringing up a really great point, and I don't believe that the average consumer is as flush and healthy as they like to say on television, or at least some of the media. So I think your point is really well taken. I think that what you're clearly describing is what Wall Street is afraid of. They don't like to ever say there's a recession coming. They never saw it coming, even when it's in front of them, because they don't want to tell that story. And again, Todd, that's really to the whole piece about buy, hold, sell, what you guys are willing to say and how you're willing to go about business, which is really refreshing in this day and age. And
Thank you.
I want to thank you for coming on Magnum Minutes. You're welcome on. Your partner Tobin's welcome on. And I look forward to spending a lot more time with you. And I remember the old days at that old network. And it was very carefully scripted, where yours is more free flowing. And I love the honesty. So
Thank
hey, thanks
you.
for the time today. And
Thank you,
enjoy the
Jordan.
summer. Todd, great to see you. Great to have you on. And this is Jordan Kimmel wrapping up for Magnum Minutes for the Informed Investor.